Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, we are very, very close to all-time high on the Nifty. So 11,475 is where we are at, 90 points higher. And what a way to wrap up this week. You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me is my colleague Ekta Batra. And look at the green on the screen and look at the big numbers there. 300 points in the Sensex, almost 300 points in the Bank Nifty. And there's about a 200-point gain on the Nifty Mid-Cap Index as well. So this is all clear, all green kind of a market. And I mean, you know, for me, the heartening thing is that the market breadth has also picked up because the last 2 days, yesterday and the day prior to the holiday, markets were strong, but it didn't show up on the market breadth. I mean, advanced decline was actually quite poor. So that is not the case today. Advanced decline, essentially the overall market breadth is looking pretty okay. The story, of course, I mean, there is nothing new in a way which is leading this move. It's just maybe a bit of a pullback, which you're seeing in Asian Forex, which you're seeing in Asian equity markets. Dollar is in a bit of a retreat. We've not seen any big rally in oil prices after that 4% drop that we saw in the initial part of the week. So all of that is kind of sort of coming together and leading to this risk-on rally that we're seeing, not just here, but around the globe as well. So that's essentially where we find ourselves at 65.5 odd on WTI. This is flat. I mean, if you look at the last 2 days, it's flat. It's not rallied, and I think that's the big positive for a market like India. Ekta, morning.
Hi, Prashant. Absolutely. Well, on a week-to-date basis as well, the Nifty's done very well as compared to its Asian peers. So up around 0.3% for the Nifty. The mid-cap index has outperformed and rallied around 1.4%. And compare this to the MSCI Asia ex-Japan, which is down around 3% on a week-to-date basis. A lot of stocks in focus. We have a lot of the metal stocks which are bouncing back today. So Tata Steel, Vedanta, for example, are gaining. So up anywhere between 2 to 3% Sun Pharma, just look at that stock go up 13% on a week-to-date basis, and it's gaining today as well. Jet Airways finally coming out with its numbers on the 27th of August. That's next Monday, so watch out for that one, up around 1.7%. And Intrasoft Technologies, really perplexing. It's recovered from the day's low. It was down almost 14% at one point in time, but nonetheless, it's been weak for that particular stock, losing quite a bit on a week-to-date basis. But let's get talking on the technicals then. We have Mitesh Thakkar joining in for that. Mitesh, over to you. For the Nifty, what would you strategize with the Nifty just about 20 points away from an all-time high?
Yeah, so I think, you know, we've been calling for some range on the Nifty between 11,470, 480 on the upside to about 11,350. And I think if you break on about this 11,480, 490 zone, then I would take a long with a 30-point kind of a stop loss, hoping that the breakout does see the Nifty head towards 11,600 levels or thereabouts. The Bank Nifty also similarly, I think, is just on the verge of breaking about 28,150 if that happens. I do expect that we could possibly make an attempt to retest the earlier highs, closer to about 28,380 on the upside.
What would you trade in terms of stocks, Mitesh?
Yeah, so I have two stock recommendations. M&M, I think after a few days of consolidation at all-time highs might pick up, so that's a buy with a stop at 945. Look for targets close to about 995. And IDFC, after about 10 days of sideways consolidation, is breaking on the upside of the range, so buy with a stop at 50. Look for targets of 55.
Okay, all right, Mitesh, we're going to leave it on that note. Thanks very much for joining in and taking us through all of your technical strategies. Let's get in some more F&O strategies. We have Krish Subramaniam joining in. He's from Altamount Capital. Krish, over to you. Your stocks as well as index call.
Thanks, Ekta. I think the market has defied yesterday's fall in the second half, and there was some pessimism, I think, towards the close of last day. But I think it has been more or less erased, and we are now inching upwards towards almost all-time high. So I'm keeping the Bank Nifty in focus, wherein probably we could do a bull spread. Buy a 28,500 to a 28,000 strike call and sell a 28,400 strike call. And the cost comes to about 150. The maximum one could gain is 250, and keep recommending a stop loss of 75. And stock specific, going with the leaders, Reliance, which has been leading the charge in this market. Again, recommending a bull spread between 1200 and 1240, that is buy a 1200 strike call, sell a 1240 strike call. The net cost comes to about 13. The maximum one would gain about 27 and recommend a stop loss of 6. The last one is L&T Finance. I think this could probably be a big gainer if it breaks past 185. And today is showing all the right signs of doing that. So probably one could do a bull spread here again, buy a 175 strike call and sell a 190 strike call. The net cost comes to about 480. The maximum one would gain is beyond 12 rupees and recommend a stop loss of 2 rupees.
Okay, fair enough. So those are F&O trades and F&O strategies which are coming our way. Thanks very much, Krish. We'll speak with you soon again. And appreciate you getting us those ideas. Okay, I just want to highlight a couple of stocks before we move any further, because this is a market which is throwing up so much. I mean, so let's just highlight a few of these names before we move any further. If you can have the REITs stock up, so that is up 8% odd. Okay, those are the live visuals coming in. Former Prime Minister Vajpayee, who passed away yesterday. His, I think, body being brought to the headquarters, the BJP headquarters. So that is what is coming on your screens at this point in time. We'll have more updates on this, but that's what we have at this point in time.
Okay, all right. So we'll keep getting you those visuals. But just focusing back on the markets, you know, it's turning out to actually be quite a good session, and it is a lot about the entire pharmaceutical space, which is rallied on a week-to-date basis. So, for example, Lupin, which is up around 6% on a week-to-date basis. A lot of these stocks have, in fact, been beneficiaries of a weaker rupee. The rupee is closed for trade today, but nonetheless, it closed above 70 for the first time ever yesterday. In fact, let's get in some opinion on the rupee.
Just a quick point, I just want to highlight a couple of names that I was going to before we do that. You know, look at something like a REITs. That is, it's a new listing. I mean, it's got a big 8% move as we speak at about 308, 309 rupees. You look at something like a Cadila Health, which is up about 4% odd, 354 plus on Cadila, big volumes. And by the way, I mean, these are only names which have got large volumes that I'm highlighting. Edelweiss is up about 7.25% at about 294 plus. We've got Bank of India, which is coming up about 3.75%. JK Paper, I mean, almost 45% this month so far. The stock's at about 179. So, I mean, you know, you've got Goa Carbon, which is up 3.5%, Canfin Homes, which is up 3.5%, and then you sort of go down the list, and in volumes are the casualty. But as I said, today is a day when there isn't any dearth of a broader market participation, and that you can see from the broader advanced decline ratio that we have going on at this point. But you were talking about the rupee. And,
yes, absolutely. Let's get in some opinion from Samaran Chakrabarti of Citi. He's talking about the current account deficit as well as the rupee. Let's listen.
Components of trade deficit, which are imports rather, which are increasing, is quite wide-based. It's in consumer goods sector like electronics. It's also in capital goods sectors like machinery and transport equipment, etc. So everywhere almost we are seeing a significant uptick in import demand. Run rate of about $17.5 billion of monthly trade deficit from here. Then we will probably reach about $88 billion of current account deficit for the full year, despite service exports being much better than what we had anticipated, and we had upped the numbers on that front as well. So 88 billion will be roughly about 3.2% of GDP. We have penciled in another 25 to 50 basis point rate hike in the latter part of the year to mainly accommodate the view that is coming from the MPC that they're very keen to get to that 4% mark. We are baking in 25 to 50 basis point of more rate hikes at this juncture. Not so much because of the currency defense, but more because of inflation. The trade deficit shock has spooked the investors a bit on INR. So we will have to see the next couple of prints on this. There is also the expectation that as oil prices have cooled off a bit, that should start showing up in the trade deficit numbers. If that happens, then possibly it's all good. The other thing that people are observing is the fiscal deficit trends in India. So if we don't see any significant slippage over the next few months, then the worry on both trade and fiscal front will be lower, and that can cool off the pressure on the currency. But otherwise, we see the trading range now settling around 69 to 72.
The Bank Nifty up around 1% at this point. Good advance decline ratio on our hands. In fact, currently stands at almost 3:1. So 1,500 stocks advancing to around 550 stocks declining. Just want to point out Apollo Hospitals. That stock has actually had a fabulous week. It's up 24% on a week-to-date basis and up around 3% today. So there is something probably happening, maybe some amount of positivity post the rollout of the National Health Insurance Scheme, which was announced by the Prime Minister on the 15th of August, and that will take place on the 25th. But after, I think, the conference call on last Saturday, there is something about maybe what the management said that has really fired up sentiment. So that stock has rallied quite strongly after that. But Manisha joins in to give us an update on what's happening in the commodity and currency space. Manisha, over to you.
Thank you so much for that, Ekta. I want to talk about the precious metal prices because this is the worst weekly decline that we have seen since mid-2017 come in for the gold prices. It's down by nearly 3%. This is a sixth straight week that you are seeing decline in gold prices. And this is a week when we've seen prices break below $1,200 per ounce. We saw that important 1180 giveaway as well. And we did see a 19-month lows of $1,160 per ounce come in for the gold prices. From those kind of levels, we're trading at 1175. So some buying on the lower side, and that's because you have seen the US dollar as well pause in the kind of rally that we have been witnessing there, and the markets are taking some better cues from the global markets as well. There's an interesting pattern to look at though, because when you look at the global gold demand for first half of 2018, that has been the lowest since 2009. The Indian imports as of now stand at 407 tons. It usually is the second half of every year that you see this demand pick up. But the important trend really is that the demand for gold in electronics, smartphones, vehicles, etc. is at a 3-year highs. So the industrial demand for gold clearly has been increasing. But as far as the investment demand, the jewelry demand, that of course has taken a bit of a hit. But second half of every year really tells you on where the gold prices and the gold demand in sense of investment and jewelry is headed. Well, talking about jewelry, and we are now joined by Rajiv Pople of Pople & Sons. Rajiv, hi, good to have you.
Hi.
It really, with the prices at where they are, have you seen the jewelry demand come back? Because much of the last couple of months has been the inauspicious period in India as well, where people don't go on and buy newer things. Does that time seem to be passing away now?
That's right. What we see is Raksha Bandhan as our start of the festive season for the retail shopping. And we had the IAJS, which is the largest jewelry show for India, which happened just last week.
Right.
That gives us the feelers of the market, which is across the country. And it was very optimistic from orders are concerned from the trade. So that gives us a very clear aspect as to how the season is going to be approaching. Gold demand was pretty high in IAJS, and so we understand this is going to be a good season. Where
Rajiv, what has been the number really? Because I was reading a report which says 8,000 crores worth of trades or orders have been cleared in IAJS this time around.
Right. That's right.
What is it on a year-on-year basis, and how would you look at that number?
This is surely a higher one as compared to last year, because the entire morale was pretty low due to GST and other factors last year. But we are reviving from that aspect now, and the season's looking more sturdy. And with the gold price drop, it's just a faster closure situation, So the IGS gold fixing was at a lower price than before, which is an incentive basically for the retailers also.
Okay. So what is your sense on where can we really see a pickup in demand coming in? What precious metal, what size, what kind of a money spend are you really looking forward for? We're
looking at a growth compared to last year for sure, because it's a better season overall. Raksha Bandhan is our start of the season for us, and that's where we see the figures to start rolling in. Since orders have been good, deliveries will be faster in place, and that's how we would see there won't be an issue of supplies. So that's a good indication overall as morale is concerned, even from the trade point of view.
Rajiv, as you said that the gold pricing fixing was on the lower side, the gold has been at the Indian pricing has been at a discount from where the international markets have been trading. But with the kind of volatile moves that we are seeing in gold, how encouraging that really would be for the consumers coming to buy into it?
There is less volatility where India is concerned.
Yeah, sure.
So the international price had a drop. The Indian pricing is below 30,000 for quite some time now, which is quite good as a price from the retail point of view also. So we are still pegged at 29,500 odd, which is a good price overall from the festive season point of view.
Point taken. Rajiv, as you mentioned, it starts with Raksha Bandhan, and then of course there's Ganesh Chaturthi, and you have Dhanteras, Diwali, wedding season, etc. coming in as well. The World Gold Council says that the Indian import this time around also would be around 700 to 800 tons in sense of gold. Do you see that kind of a demand really emerging?
We've already said crossed 400 tons, you said now, and second half is still to start. So all the more reason we'll expect that easily being crossed as a number with the season coming ahead.
All right, Rajiv, we'll let you go at that. Thank you so much for joining us. That clearly is quite a hopeful and encouraging voice that there is an expectation that you will see a pickup coming in for the gold jewelry.
Gold prices. So we promised you that conversation with the principal economic advisor, Sanjeev Sanyal. My colleague Lata sat down with him and they discussed everything from the currency to the macro stability that we have at this point. Here's that a piece of that conversation with Sanjeev Sanyal. Listen.
Rupee is allowed to find its own level in the long to medium term. The Reserve Bank, however, has a long-held policy of controlling volatility, which it has more than adequate foreign exchange reserves to do in either direction. So just a few months ago, it was appreciating very strongly and it was accumulating foreign exchange reserves. And now that it is has been weakening, it has been controlling the volatility on the other side by using up the reserves. That's what the reserves are there for, and they are, doing exactly what they have done for now decades. It's a well-established policy. Now, as far as the economics of it is, remember, I'm sure you've heard of something called the impossible trinity.
Yes.
If you have a relatively open current account, then you have to opt for either the monetary policy or the exchange rate in the long to medium term. Now, because we have now an explicit monetary policy committee-based system, clearly we have opted for monetary policy. So now, other than obviously extreme situations where we may use capital controls, which we normally don't, and allowing for some use of foreign exchange reserves to temper volatility, we will now allow in this format explicitly allow the rupee to find its own level. Again, whether it's the economics or long-held practice, we are basically doing what is the appropriate thing to do.
Okay. No, is the government's view or your view that a correction in the exchange rate is enough to bring the trade deficit and the current account deficit under control?
As I said, the rupee will find its own level. Now, one important thing that is always forgotten in all of this is that when you're thinking about competitiveness, which I think is what you're hinting at, we have to think about not just the bilateral exchange rate vis-a-vis the dollar. The rupee has indeed been weakening against the dollar, but if you look at the last 5 years, it has been very, very solidly stable. In fact, has appreciated, in fact, against virtually every other major exchange rate. So whether it's the euro or the pound sterling or the yen or, in fact, even the Chinese yuan, against whom obviously we should, from a competitiveness perspective, keep a watch. Against all these currencies, we have been broadly stable. So the point is that what is really happening is, given various external factors, including the Turkey situation, the dollar is strengthening.
Yes.
I think the better way to think about it is the dollar is strengthening. The rest of us are weakening consequently, because by definition everybody else weakens. Our exchange rate with pretty much everybody else is stable. So I don't think there's any reason to jump to any conclusion, panic, or any other thing. And I think, in fact, I would be far more concerned if the central bank suddenly opt for a new and untried policy. It is doing exactly what it has done for a long, long time, allowed the long-term adjustment, managed the volatility, and of course, in the very long term, we also look at the real effective exchange rate, which is based on a basket of currencies against whom, as I said, we are very, very stable.